How's it going out there? It's Tuesday, April 19th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. So it's earnings season, favorite time of the year. You guys know I love it. So all the companies not only report their earnings for the past quarter, but they give you an update of what's going on around the world and also offer their guidance, usually over the next 3 months, sometimes a little bit further. One trend I'm noticing thus far, very, very early into earnings season. Next couple weeks is going to be absolutely nuts. It's very early. One trend I'm noticing is companies beating earnings but missing on sales. Meaning they're finding ways to operate more efficiently, whether it's raising prices, which, is seen from every company out there with inflation running wild, or by reducing expenses. And the problem with that when it comes to reducing expenses is it comes in the form of what? Maybe lowering marketing budgets. And the fast way to cut costs by laying off employees. But when a lot of that money is coming from raising prices, that can't happen forever. And we're now seeing data indicating transportation companies are seeing a slowdown in demand first time since COVID. So we're seeing that take place now. With inflation moving higher, rates moving higher, people's bills, and more money coming out of the system, with the Fed going to aggressively raise rates, which they haven't really done yet. But you're seeing the 10-year rise tremendously, almost at 3%. Mortgage rates over 5%, or 5.25% a couple days ago. I don't know exactly where they are now. So these companies have to find ways to earn more out of those sales, and they have to operate much better. Because margins are incredibly high, higher than they've ever been. It's everything so. It would, the move into digital is a lot easier. A lot of these companies are smart. But raising price, you're not going to be able to do that forever. Again, those cracks in that foundation, you're seeing. But what are they going to do? How are they going to cut costs? Everyone's saying, wow, employment market is great. Anybody wants a job, they can have it. There's millions and millions of jobs available. Let's see if that's going to remain the case going forward. And that was before all this shit was taking place. So that's a trend I'm looking for in earnings season. Like, what are they going to do where they're talking about supply chain issues? They're saying, hey, we're able to pass on, most companies, these higher costs, but the costs are tremendously higher now. I know I'm building a house. I was just told my pool that I wanted to build is pretty much double the price it was 5 months ago, which is insane to the point where I'm probably not going to be building it and looking for someone else to do it. It's crazy. So that's a trend I'm looking forward to, seeing what they're reporting, what their guidance is going to be. The supply chain issues, which I'm seeing if you're looking at a couple of semiconductor companies that have reported, they said that their chips, their sales got nailed because of massive supply chain concerns from March last month with China, the lockdowns and COVID. But yet you're hearing on TV that everything's topping inflation. We're going to be okay. Things cool. These are the things you want to listen to in earnings season, get an indication. Especially the larger companies who have access to every place all over the world. That's where they're operating in. Despite earnings season, which always gives us great headlines on a daily basis, nobody really cares right now. I mean, the biggest story is not Russia either, or Ukraine. How the war has entered its most deadly phase thus far, at a time when many thought the situation would ease by now, including myself. The topic this week isn't really inflation, because all of a sudden it's turned to everyone, economists, research firms, you watch the media outlets, believe inflation is close to peaking now. We're really close to peaking on one piece of data, which CPI, the core CPI, which doesn't include China's massive lockdown, which we get how much of a supply is from. But it's easing. Everything's okay. So nobody's talking about it. The biggest story, however, again, not earnings season, not the war, not inflation, is Elon Musk, who being offered to purchase Twitter, the social media site, $43 billion, which amounts to a little over $54 a share. And Elon Musk, his character, I get it. People love him, people hate him. I mean, he has a huge following. You can't ignore what he's accomplished. I think not Twitter, but Tesla should be trading maybe at $300 a share instead of where it is now, 900, that wherever it is now. But when you have a loyal following and believers and people believe, they hold this stock forever and they love it. And he's delivered on a lot of those promises. Again, you have those attractors, people who've been saying you should short Tesla since it was 100, 200, 500, 900, and they're still going to say it, regardless of the production numbers going up and the profitability going up and the fact that they don't have any liquidity concerns anymore. But make no mistake, because this is a huge story, and I don't think it's a huge story for the reasons that you're hearing on TV. Especially when watching, again, it's just so much shitty coverage. I won't single out anyone, but there's so much shitty coverage on this event where they're talking how Twitter should not be sold to a billionaire. The board is against Elon because he wants to turn this into a free speech platform. Those are the big debates. And guys, that's the bullshit you want to avoid. That's the bullshit, okay, that you want to avoid. It gets you fired up. It gets you want to say things on social media. That's the point. That's why they're telling you this. That's why that's the reason for the story to be so big. Another billionaire is going to own an outlet. He shouldn't be able to own a media outlet. The board of directors should be against this. Say wants to turn it into a free speech platform. No free speech. Is this anti-American? I mean, again, a lot of this is BS when you look at Twitter. And these narratives created by the media to make your blood boil, right? So you're going to post more crap on social media. You're going to watch more TV, which is great for these companies, but it does nothing for you. It does nothing for you. To probably get you angry. But the political narrative, BS, it astonishes me. It really does. And Elon shouldn't be allowed to purchase Twitter because he's a billionaire? Really? Zuckerberg has full control over Facebook, right? One of the largest media outlets on the planet. Washington Post is owned by Jeff Bezos, right? Look at Murdoch family owns Fox, which includes the Wall Street Journal and the New York Post. Bloomberg became the mayor of New York City. Also ran for president. Lost, got smoked, but became a massive donor for the Democrats, especially finding those governor races that was super tight and providing hundreds of millions of dollars to them, right? Georgia, South Carolina, whatever. You can do what you want with your money. But you saw what type of stories that were coming out of Bloomberg and what was published during the election. Atlantic is owned by Steve Jobs' widow, who's a massive liberal, who backed Kamala Harris for president, maybe the only Democrat to do it during the Democratic presidential primaries. Democrats hated Kamala Harris. I mean, she was the first major candidate to drop out of the race because she got crushed during the debates by Tulsi Gabbard, Elizabeth Warren, and Biden, and she was out like immediately. Mark Benioff, billionaire CEO of Salesforce, he owns Time. Steve Forbes with Forbes. What are you talking about? I mean, it amazes me that so many of these sites, they're writing stories through their sites, and they have articles on how Elon Musk should not be able to purchase Twitter because he's a billionaire. Now, Twitter's going to become this haven where false information is published. Really? False information and fake stories? That's what you're worried about? Fucking hypocrites. You got to be kidding me. But that's the narrative being pushed. That's what you're seeing on all posts every place right now. And then you go to the free speech argument, which is being pushed by Musk. So he wants to be a free speech platform. The conservatives are saying, you know what? If he's not allowed to purchase Twitter, that's anti-American. As America is turning away from the founding principles of free speech. Again, this narrative is bullshit as well. And look, Twitter, like all social media sites, they're platforms. They're run by companies, board of directors, so free speech is not in play. You have free speech on someone's platform when you're working for someone or a company. If you think so, you listen to this at work, stand up on your chair and say women deserve less money than men and everyone that's gay should not be allowed to work in the office. Try saying that. You'll get fired in about 30 seconds. You don't have free speech on theyese platforms. That's the way it is. They're owned by somebody. And now they're polling people who do not support their agenda, which we saw during the election, which is crazy. You're like, whoa, I mean, a lot of people didn't know it, but that you're suppressing like full stories. And now a lot of things that were suppressed, we're seeing come back to light that happen to be true, which is pretty crazy. But free speech, that's not available on Facebook, Twitter, Instagram, TikTok. And if you look, at it, take a step back for just a second. I mean, the control that they have that we bitch about all the time is our fault. It's our fault. I mean, at the end of the day, We control Facebook, we control TikTok, we control Twitter, Instagram, we the people, right? We're on those platforms talking all the time, telling everyone what we do every minute of the day, where we're going on vacation, which, we're creatures of habit, so we're going to go on vacation the same weeks during the year, shop at the same places during school season, whatever. Going away in the summer months. And what do? We share everything we like. Again, every place we are, we're here right now, checking in, and we share everything, our entire lives on these platforms, which they use so marketers could just put shit in front of us immediately, which we see. Try doing a Google search on whatever. You're going to see all the ads pop up on every site you look at for the product you just wanted. So if you stop using, or we stop using all these social media platforms, they go out of business. Or at least they'll have to change their business models from advertising to something else, which Facebook is doing, right? They're doing a Metaverse. That's not going to happen right away. Be over the next few years. But I expect all social media companies to change into Metaverse companies over the next 3 years or so. It's happening now. Look at all the major retailers, tech companies, buying up real estate on certain platforms. It's a way to use decentralization and security checks to where you need to put in your phone number. You need to have an accurate address to be in the Metaverse, which removes fake accounts, limits the bots that are controlling and stuff being pushed at you. There's a reason why you're seeing billions pour into this industry right now. And when I say right now, this year, past 4 months, Epic just raised $2 billion for the Metaverse. Bored Apes, $400 million. It's an Australian company, $300 million. To Qualcomm, major companies starting funds to invest in Metaverse companies. I mean, you don't really see things like this with market conditions like that. With money pouring in where inflation's running wild, major war taking place, supply chain concerns heating up, the markets around the world selling off, right? The Fed's going to be aggressive, raise rates. And you don't really see money pouring. You'll see it in a few ideas, really good ideas. Maybe it's an AI idea or a climate change idea, ESG, whatever. But an entire sector, see this much money flow in during these times when SPACs can't raise money right now, IPOs are getting put on hold, is interesting. But that's the trend. That's where it's going. But getting back to Twitter, the story that's being fed to you, especially over the past few days, even during earnings season, surprised there's so many good headlines, but I guess everybody wants to comment and say shit about this because of the narrative they're pushing out where billionaires owning media sites, it shouldn't happen. Free speech is being threatened, which is not even relevant in this case because it's a platform. But there's a much bigger threat going on here. And it's how public companies are supposed to operate and why the system is becoming broken. That's the real story here. The rest is just smoke and mirrors and getting you fired up. That's massive. I mean, look, when you buy a company, you become a shareholder. All of you are shareholders of companies. So you're probably listening to this company. You might be shareholders of my company and own tokens. The publicly traded company, then what? They hire a board of directors who are supposed to act in the best interests of you, the shareholder. That's their job. So forget politics and free speech for a minute. Forget if you're a Democrat or a Republican for a minute, just for a minute, which is hard to do these days. The facts are Elon Musk made a bid to purchase Twitter a week ago at $54 a share. That's over a 50% premium since the day before he started to accumulate shares. In other words, if it wasn't for Elon Musk, and you're a shareholder, I'm talking to you as a shareholder, Twitter would still be trading around $33, $34 a share instead of $48 a share, with a $54 bid on the table. So if you're a shareholder, this is ecstatic news. I don't care if you like Elon, if you hate him. As a shareholder, you're buying his stock because you want it to appreciate to value. When you get that value, you could sell it, and then your family becomes more wealthy. You can take vacations. You can do whatever you want with it, buy your kids more stuff. That's why we invest, is to improve our lives, to increase our wealth. And this is exactly what's happening right now. It's ecstatic news. Considering every tech and media company is getting smoked. They're down 20% plus. Even the NASDAQ 100, if you take the largest companies, I should just say take maybe the 5 largest. Because you're looking at Microsoft and Apple holding up rather well, down, but now it's down as everything else. But the NASDAQ 100, the average company is down over 15% year to date. So you're looking at technology stock getting smoked, growth names getting nailed, but Twitter being in the low 30s right now without this bid. I mean, you see this thing, it could easily push into 20s because it's not really growing anymore. I mean, it is, but not as fast as other social media platforms that are getting smoked even more. And do you think the market for growth stocks, like, looks good? Do you really think it looks good over the next 12 months with the Fed? Starts to aggressively raise rates and reduces balance sheet, taking leverage out of the system? Hey, there's so much money sloshing around. You deserve that higher premium when you're growing much, much faster than the overall market. But now that premium has to shrink. That multiple has to come down. Just like it went from 19 on average to 22, 23, 24 because we have super low interest rates for such a long time. And we've flooded the market with money. You have to have that multiple start coming back down now with interest rates higher. And they're higher. Forget about with the Fed being behind the curve. You're looking at every rate across the board is signaling that the Fed, listen, you guys are idiots. This thing's got to be at 3%, the Fed funds rate. Whatever you want to put it there, put it there. And I'm still seeing people on TV going, I don't think the Fed's going to be that aggressive. Like they have a choice. Whatever, regardless of what you do, if you keep it at this level, inflation is going to skyrocket. Imagine if the Build Back Better bill was passed. Imagine if that was passed. Holy cow. You know where inflation would be right now? You're about to 8-9%. I mean, they just wanted to throw trillions more into the system. Holy cow. You had one Democrat that was against that? Just one? I'm not picking favorites here or not or saying anything, but it just shows you that something that ridiculous with inflation already running out of control before the war, before you were trying to pass this bill, that power trumps everything. It trumps everything. But you're a shareholder in a technology stock that is getting smoked where no one's really, there's money flowing out of technology right now like crazy because this is a growth area and we're probably not going to see strong growth, at least for the next 12 to 18 months until the Fed gets its act together. With that said, shareholders should be ecstatic, and so should the board of directors, but they're not the board of directors. Interesting. They actually put in a poison pill, which is legal. It's used to prevent a takeover, try to get a better offer for shareholders. So that's why when you're considering buying a public company, you're going to try to do everything you can to persuade those board members. Right, a special deal, like they could stay on for a year or two, special incentives for their vote, whatever. Believe me, this stuff happens behind the scenes. And it's usually a good deal because, usually the board of directors owns a lot of shares, but not in this case. They own less than 0.1% of the company. I like how Barron's is comparing that to not Facebook. Facebook, Zuckerberg still owns a majority of that, but usually the board of directors, you have the founder or the CEO of the co-founders, who's usually a large shareholder. Dorsey is on the board. He's the largest shareholder. It was much, much larger. It's only 2%, but he's coming off the board next month. And he's probably going to sell his shares in Twitter. I thought it was funny because he slammed Twitter's board after this, saying it's consistently been the dysfunction of the company, of what he called a Silicon Valley proverb, which good boards don't create good companies, but a bad board will kill a company every time. Interesting. Because when you look at this board, outside Jack Dorsey, again, he's not going to be there next month, who owns 2%. The rest of the board owns less than 0.1%. I know they want to compare this to Apple or Microsoft. It's been around for, this is Twitter. Well, you don't have the founders and the people involved in the company the longest, even if they're not on the board, they're usually like large shareholders. Well, usually they're on the board, but these are guys that don't have a large stake in this. But yet, the board of directors, they get paid a lot of money, $3 million combined every single year in cash and stock rewards. That you get paid being the board, which Elon tweeted and said he's going to eliminate if he buys a company. Another good thing for shareholders. Probably not good if you're looking to persuade the board in any way possible, because they're going to do everything they can to not get this deal done, even though it's by far amazing and in the best interest of shareholders. So, why is the board of directors so adamant about refusing this bid? To me, this is the much bigger deal than all the free speech shit and the billionaire stuff. Because the board of directors, they're not operating in the best interest of the shareholders. At all. Because if they did, they would really be considering this and really saying, wow, this is amazing, considering it's a 50% premium than where the stock was trading a month ago. But if this is the case in the way the board of directors is acting, then why would anyone, any of you listen to this or anyone that buys stock, why would you ever want to buy a publicly traded stock again? If you have a board of directors that doesn't have a lot of shares outstanding, their interests are not in your best interest, which they should be at all times. That's what it's fiduciary responsibility. There's no company that's publicly traded that should say, I'll never sell out. I'll never sell out. Because if the bid is right, you should, and it's right for shareholders, you should sell out. Maybe you don't. Maybe you believe in a vision and I want to get bigger and whatever it is. But if somebody comes up with a price that the shareholders think is fantastic for a company, especially like Twitter, and now you're going against that because of some narrative. I don't even know. Is it the billionaire narrative? Is it this free speech narrative? But why? Why is this happening? Who knows? But let's look at the data here, because Twitter's doing $5 billion in sales, and this is a shareholder you should be concerned about. Doing $5 billion in sales in 2021. They're expected to grow over the next 2 years, while earnings expected to grow around 15% annually over the next 2 years. Not bad. But Twitter has 220 million daily active users, which they monetize. That's about 15% over the past 18 months. So again, see a little bit of growth. But this is a company that's getting smoked by Facebook, which has almost 3 billion users. These guys have 220 million. In fact, if you go over the social media platforms, YouTube, WhatsApp, Instagram, TikTok, WeChat, LinkedIn, Reddit, Snapchat, all the major ones, all have more users than Twitter. YouTube, 2.5 billion. Again, a lot of these guys have hundreds and hundreds and hundreds of millions of daily active users. They're blowing Twitter away. So, if you look at Twitter, not growing as fast, and it's seen as a mature platform. And you look at TikTok, which is brand new. They generated $4.6 billion in sales last year compared to Twitter, which has been around forever. I mean, you're looking at Twitter's sales and where they're supposed to be, and I have the numbers in front of me here, but you're looking at they generated more revenue than Twitter, and, again, $5 billion is supposed to go up to $5.9 billion in 2022, these are expectations. But if you just take 2021, TikTok's $4.6 billion in sales, close to $5 billion in sales for Twitter. It's been around forever. And I can tell you, TikTok's probably done $4.6 billion in sales just the first 4 months of the year. And that platform is exploding. This is pretty big, right? From Elon Musk, I give that Twitter is one of the slower growing, mature social media platforms. But Elon Musk is providing a very super attractive price and an offer, especially given how much of a force he is on this platform in terms of engagement. I mean, he's everywhere and everyone comments. And if he buys this, you know what he's probably going to do? Maybe he said, like he said, free speech or whatever, he brings back Donald Trump. Which, if you were a shareholder, regardless if you're conservative or liberal, you should be ecstatic about. He's one of those following common persons on Twitter, which, when his account was active and they threw him off. But as a shareholder, you want more posts, you want more engagement, which leads to more advertising dollars, which leads to more earnings, and which leads to a higher stock price. Of course, earnings drive stock prices. This is what you want. So as a shareholder, this is a perfect deal for you. But the board of directors doesn't think so for some reason. And that's a major problem. Because like I said, even if you got to put your politics aside really quick. We're talking as a shareholder. Because if you're looking at the top 10 Twitter accounts, which include Justin Bieber, Taylor Swift, a whole bunch of other people, Lady Gaga, they're not posting on Twitter anymore. They barely post anymore. Look, Taylor Swift has like a post a month, I think. Justin Bieber, maybe once a year. And they're all posting on Instagram. That's their core market, not this. The core market for Twitter is like 30 to 45-year-olds. Instagram, all that Justin Bieber is the younger crowd. That's the Instagram. You need influential people who are on a platform that people like and dislike, who are controversial, like the Elon Musks, the Donald Trumps, whatever. But that's going to be great for the company if he purchases it at this level. But again, the board of directors are like, I don't know. Not really, are they considering the offer? I mean, they have to consider it, but they're doing everything they can to try to find another bid. They're not going to find another bid because this offer is amazing. This offer is freaking amazing in this market. The next year, you think technology companies are going to outperform? Really? With inflation running wild, even if it moderates here? With the Fed raising rates, who raise rates 0.25%, that has to raise another 2 full percentage points by the end of the year. At least that's what the 10-year is telling us. Are you kidding me? I mean, come on. You're going to find someone else that's interested in this bid? But you have a board director looking like it's trying to do everything in its power to make sure Elon Musk does not buy Twitter, even though he's paying this hefty premium. That's absolutely great for shareholders. Which is the reason why you bought the stock, for the stock to go higher. This is a major concern, guys. To me, this is the story. It's a very dangerous path we're taking, and we know how fucked up politics is, where, they put our children's safety at risk to gain more power. We see that in cities and mask wearing and lockdowns and stuff. This is a major story. It's threatening the foundation that stocks were built on. And likely empowering the move, you can see why Bitcoin, crypto, get innovation taking place, more decentralized, for the most part, operating out of the scope of politics and central governments. You can see why that's such an attractive alternative when we see shit like this happen. But how do you make an excuse not to accept that bid if you're a shareholder? How? Who's going to bid higher for it? Maybe you get some guy to buy. I don't know. You're going to really bid higher for that? I don't know. But Twitter's board, they should be ashamed. And I have to say, for the board of directors, right? If you really think Twitter is worth so much more than the current price or more than the 50% premium Musk is offering for it, which that's what you're going out there seeing, hey, Twitter's worth a lot more money, guys. Who's going to buy it? Let's not make Elon Musk buy it. Who's going to buy it? If you really believe that, then why the fuck were all of you not buying the shit out of Twitter over the past 4 months when it was trading in the low 30s? Could someone answer that question for me? Why weren't you buying it in the low 30s over the past month, 2, 3, 4 months? Why? Now Elon Musk comes out with a bid. You're like, hey, it's not worth that much. Well, why weren't you buying if you didn't think it was worth that much? And not only that, how are you pitching this to somebody else when you weren't buying at $32 a share? And I think that the average target price at a 32 analyst is like $40 before this offer. I think it was like 41. It's trading at 47. I mean, these are all the analysts. The average price, he wants to buy it at a 30% premium, 20% premium, whatever, from where the average target price is, and that's not good enough. In the politics involved, and the things are involved, this is very, very, very scary. Because if you have a board of directors that's not acting in the best interest of shareholders, then why, as a shareholder, would you ever buy a publicly traded stock again? Because if he decides to pull out and says, F you, just like Bezos said when he was going to build a massive complex and headquarters in Long Island City, a place that I lived at, melting pot of the world, hardest workers, great people, average job, probably paying 90 grand plus, and you have some little freaking politician girl doesn't know anything about economics, force them to leave, and Bezos was like, you know what? All right, fine. You don't want my business here? Fine. Like these tax incentives were going to be given to them before they started generating hundreds of millions of dollars, or even more billions in revenue or in profits. They were going to filter down and offer more affordable housing and places like that in a place that is the best place in the world to actually do this. Well, okay, fine. You know what? I'm going to pay. So if Elon Musk just decides, hey, you know what? I'm out of here. This stock's trading at 30. So as a shareholder, what do you do here? I mean, it's almost forcing you to kind of get out. I mean, he said he has a plan B. Who knows if he has a plan B or whatever, but it's pretty crazy when you think about it. Anyway, pay close attention to the story, not for the billionaires owning another media company and these guys, their sites, and the people writing for the site saying he's a billionaire, which is, again, it doesn't get more hypocritical than that. It's hilarious to me. You don't pay attention for the free speech narrative because you really don't have it. It's like Colin Kaepernick didn't have it in the NFL. They gave it to him for a certain time, but then when you saw how people were getting sick of it and the numbers were going down, the NFL was like, okay, enough of that crap. We're a business. We need to make money. Let's not focus on politics because that's why people watch sports, to get away from all the bullshit and the fake garbage. But if you're displaying on a platform, which basketball is seeing, look at their ratings. They continue to do it. But that's a platform where you don't have the right or the freedom of speech. But yet we're hearing about the freedom of speech, He can't buy his platform, make it freedom of speech. That, again, it's, you want to comment on your social media, whatever, but as a shareholder, I mean, this is a much bigger deal. And it's threatening the foundation of our financial system, our publicly traded companies whose board of directors are hired. They're hired to be acting in the best interest of shareholders. It's not the case in Twitter, and if it's not the case anymore, then why should anyone own a publicly traded company again? That's the biggest story. Guys, a lot to digest there. I'm sure I'll get some questions, lots of them. FrankCurzioResearch.com. Feel free to email me anytime. I'm here for you. But that's it for me. Enjoy the day, and I'll see you tomorrow with the one and only Daniel Creech to break down lots of earnings, lots of fun stuff. Again, very busy week this week, next week, and the following week, where you're going to have a ton, probably 60, 70% of the S&P 500 companies reporting earnings. You need to listen, focus on their guidance, see what's going on, because, man, there's so much craziness and volatility with supply chain issues, with China, with the war, with agriculture. I mean, it's disrupting so many different industries. Now we're going to get a real-time look of exactly what's happening over the next couple of weeks as these companies report. So pay close attention, and I'll see you guys tomorrow. Take care.